Cyclical challenges in the global automobile industry, KPIT Technologies faces the heat. A very successful software integration partner in automobile industry, over 2 decades of expertise. Software leadership with exceptional delivery. A rich portfolio of world-class brands, over 80% of revenue from top 25 clients. 2 business segments, passenger cars and commercial vehicles. Passenger cars dominate the show. A company specializing in automobiles as a single sector business, exceptional growth in revenue both on a 5-year basis and in FY24 on an annual basis. Similar performance reflected in profit after tax under identical timelines. Profit after tax percentage registering a progressive increase year after year, a story of phenomenal business growth. Strong generations from operational activities, consistent surplus from working capital management, operational funds perfectly aligned with profit after tax year after year, very much synchronized, a debt-free company, strong cash on balance sheet, very impressive return on capital employed. Courtesy exceptional performance, KPIT enjoys compact valuation facilitated by price earning multiple. Among the peers, it is placed with a privilege. It has 3 business regions, Europe and UK, America and Asia. Asia comprises Japan, China, Korea and India. Performance of Asia region during the last 4 quarters, year on year, has registered significant growth percentages, and to that extent the company is benefiting. Major clients are Honda collaboration of Japan and the Chinese EV market. Asia region contributes to the company's overall revenue about 24%, and its performance to that extent is quite significant and helpful to the company as a whole. The second business region of America has reported, particularly during the last 3 quarters, a revenue growth of nearer 5%, which is quite worrisome and dismal. US tariff protection to OEMs is helping the company retain clients, and at the same time, ban on Chinese software imports is also helping, but the concern is the share of America from 36% in FY23 has fallen to a low of 27% in the recent quarter. That is a matter of great worry. While both America and Europe have been affected by the cyclical nature of automotive industry, Europe has the impact of prevailing economic conditions in the region. Last 4 quarters, revenue growth year on year has been sliding and has reached a bottom of 10.6% in the recent quarter. The revenue share has also come down to around 49%. OEMs of Europe have gone for offshoring IT services, which is also a win-win for KPIT, but the fall in revenues is affecting profits in a very big way. Along with quarterly results, the company confirmed annual guidance of revenue growth for FY25 at 18%. Having recorded a growth of 23.5% for H1, the balance available will permit a growth of only 13.1%, which is not good. The 18% annual growth compares very poorly with FY24 growth of 45% and FY23 actual growth of 36%. This has made the market really worry about the happenings in the company. Dismal revenue growth rate guidance for H2 has had its cascading effect on the EBITDA for the same period. Company has achieved EBITDA volume growth during H1 of 29%, but as per the guidance of 21% growth for the whole year, H2 will have an EBITDA growth of only 14.8%. The 21.4% volume growth in EBITDA poorly compares with FY24 59% EBITDA growth and FY23 42% EBITDA growth. The EBITDA growth volume shrinking is not to the liking of the market. Based on its excellent performance right from 2021, the share price of KPIT has moved at a level above 200 EMA, reflecting market support and goodwill enjoyed by it. The dismal H2 guidance given by the company was not to the liking of the market, and the share was punished severely with a fall of almost 26% within a week, and it appears to climb back into the channel and get above 200 EMA is literally an uphill task. The severity of the punishment meted out to KPIT is quite clear in the Fibonacci retracement chart, wherein we find the recent price of KPIT moving closer to the 52-week low, indicating the position in which KPIT is precariously placed. From the price action data for the past 3 months, quantity movement has stayed below 100-day average, suggesting indifference to the movement in price, except when the price crashed after the guidance date. On all other occasions, quantity has not moved with the price, suggesting price might continue sideways till the performance figures give hopes with a positive bias. Close to 40% held by promoters consistently, very positive. Holding of DII and mutual fund rising is a confidence building matter. On the other hand, FPIs have liquidated about 20% of their holdings. It is a matter of concern, but on the whole, shareholding pattern strong, consistent and quite well diversified. As for the qualified institutional placement QIP as proposed by the company, the growth rate of total assets of the company along with its equity during the last 5 years makes an interesting reading. The growth in assets concurrently with equity during the period has averaged around 19%. A good growth, and the company is planning to raise an amount almost equivalent to the current equity, suggesting any inorganic addition will be almost equal in size to the present setup, and that speaks about the massive value unlock potential available in the growth plan of the company. That is quite attractive and promising. Stable margins, strong client base and comfortable order book are to the credit of the company. European offshoring of services likely to be a favorable opportunity, and its planned diversification into off-highway and truck segments is a welcome initiative, but the cyclical condition of the automotive industry is a challenge. Reliance on a single sector, vulnerability to competition is affecting the company. Crucial is the market revival in Europe and US. Hope you found this presentation on KPIT Technologies to your liking. I am Vittal Prabhu with the weekly video on Stock Learning Simplified. You can access videos with similar content at Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.